Hello traders, Stiletto Pips here, and in this video I will be sharing with you how to open up your demo trading account with a broker. Now, with a demo trading account, you are trading dollars that are not real. The only difference between demo trading and live trading is that the monies that you actually profit, you cannot actually take it and have it transferred from your broker's account to your US bank account. Okay, so this is to help you hone your skills as you are on this trading journey. So the broker that I am recommending you to set up your demo trading account is Who Goes Way. You can see it right here in the address bar. It says whogoesway.com. Once here, you're going to click download MT4. You should be aware when trying to download these applications on a Mac, it is not going to cooperate with you. You do need other applications when dealing with a Mac computer. I suggest, trader, that you go out and get yourselves a Windows computer to make things easier for yourself. Also, when trading, you want to trade with a mouse. You do not want to trade with a laptop's mouse pad that's on the laptop. You want to get yourself a wireless mouse. I promise you it's going to make your life much easier. And when trading, you really need to be proficient in time. So I recommend that you go out and get yourself a wireless mouse if you do not have one. So the first thing you're going to do here is you're going to go ahead and download the MT4 platform. Here it is right here. So I'm going to click download. And once this downloads, we're going to complete the short setup. Okay, so I'm going to click on here, open. Now, if you have any type of application such as this, you want to actually go ahead and allow the application to go through. So I have to wait for them to finish scanning to give me the opportunity to actually okay it so that I can complete the download. Okay, I have about 15 seconds remaining here. Okay. So now it's giving me the option to open anyway. And so now I'm going to open it anyways. And you're just going to simply click yes. You want to allow this app to make changes to your device. All right, and so once it allows you to, it's going to complete the setup and the download. And once the download completes, you're going to get a option to press finish. Now it's going to open up a window. Okay, this is the actual broker's platform that opened up. Okay, now when you open it up, it's not going to look like this. I assume just because I have it download in my system, it's just opening up a template that I already had. Okay, so first thing you're going to do is once it opens up, you're going to want to click on file, and you want to click on open an account. Okay, so you're going to click here. You're going to make sure you click demo. You want a demo account. You're going to click next. And you want to choose the option for a new demo account and click next. You're going to fill out this information with your name, email, and phone number. In this first box, it's just wanting you to put a 1. For U.S. residents, you have to put a 1. Now, if you are in some other country code, I don't know what your country code is, you would simply put that there, okay? Now, for deposit, here's what I want you to do. Because you are looking to trade, and hopefully you're wanting to trade long term, and you want to get access to capital that is going to allow you to trade and really make some good profits week to week or day to day. So the way we help you is helping you get access to trading capital in excess of amounts of 10,000 all the way up to $1 million. And the increments are as such: 10,000, 25,000, 50,000, 100,000, and 200,000. Okay? So depending on the capital that you're going to start with, which we're going to help you get access to by paying a small fee, because what we're doing is we're setting you up with what is called a prop firm, okay? Now, a $10,000 account may cost you $89 to enter into a challenge. What is the challenge? The challenge is to prove yourself as being a trader that can trade and can be profitable. These are what we call venture capitalists that are lending you money in a sense, okay? It's not a loan, but they're giving you access to capital to trade with a trade-off that whatever you make, they're going to keep 20% and they're going to give you 80%, right? And you have 2 challenge phases to do. So when you move on to advanced skill development, hopefully you will, and become a part of my VIP members group, you're going to have access to me Monday through Thursday, where we're trading live in the market, and I am going to help you pass those challenge phases, okay? So that's no problem. Now, as you're looking to pass these challenges, of course, you would need to choose which account you most likely will begin with, all right? I just gave you an example. 10,000 will approximately cost $89 to do something like that. Now, there are a lot of different prop firm companies out there. I'm not going to recommend one to you while you're in boot camp. However, if you want to do the research, you can. You have to be very careful because there are a lot of scam prop firms out there. I mean, horrible stories. But we've managed to get our hands on a couple that have been very, very true to what they're promising their members when they sign up. Now, another thing about a prop firm that you should be aware of is if you don't pass the phases, right, because you have certain guidelines and rules that are set in place that you must not break during any of the challenge phases. If you break them, you automatically fail the challenge. Let me give you an example. With those challenges, most prop firms will give you a daily loss maximum. If you go over that daily loss maximum, you already forfeit your challenge and you lose your deposit that you put up for the challenge, and you have to simply start over and purchase a new challenge account. So with that being said, I want you to think about what account size you're most likely going to want to start with. So the increments again are 10,000, 25, 50, 100, and 200. Now 200,000, just to give you an example, will cost something like $1,025. Okay. Then there's I can't give you all of them because I don't remember right now. But the highest one is 1,000, and in between you may spend 300 or 500 or close to $200 for the smaller ones. Okay, so you choose your amount starting with 10,000. So we're going to put 10,000 here. The leverage, you want to choose 1 to 500. Normally it's already set to 1 to 500 because that's the highest leverage that a broker will give you, and you will understand and learn and discover what leverage means and how it works for you and how it can work against you when we're going through the modules. You simply now click agree, click next, and it's going to give you your login credentials. You need to go ahead and take a picture of this with your phone, because you're going to later use this to download the phone application of this app on your phone and utilize this information so you can have access to the same demonstration account that you have on your computer as well as your phone. Now you click finish, and that is it. That is literally how you download and set up your broker's account. In the next video, I am going to share with you how to download and save your student template. All right, boot campers, in this section of this video, I will be showing you how to download and save your student MT4 template, which is this right here, what you see. It's a template that was created that has the Heikin-Ashi candles as well as the moving average that you will be using to determine if you're going to be buying or selling in the market. So the first thing you want to do is head over to the Boot Campers Telegram chat group. And right here at the top here, you want to click on the name of the group, which is FNU Forex Boot Campers. You're going to locate the files, okay? And at the time of this video, there's only 2 files, all right? So you just simply click on files, and here where it says basic student template, or if at the time you're watching this video, there's more files, you just want to click on basic student template. You find this template, and now you're going to click on the date. At the time of this video, this was April 13th that I placed this template in there. So you're going to click on this date, April 13th, and now it's going to take you to that template, the date that I placed it in here, which will allow you now to just right click on that template and click Save As. So once you click Save As, what you want to do here is you want to click on Documents in your computer. Click on your Documents folder because you want to save it to your C drive in Documents. But also you want to create a folder. Click on New Folder, and you're going to make this folder your Bootcamp Templates folder. So you just name it Bootcamp Templates. So all of your Bootcamp templates, when you begin to save them, you can put them in this one folder. After that, you just click enter on your keyboard, and now you have a folder designated for all the templates you may receive during boot camp. All right, now you already clicked on Save As, so it's already listed here in the file name, and now you want to make sure you click on the folder to add it here under Documents. So you're going to click on the folder. So now it's going to be saved to your PC hard drive, your Documents section in your computer, and then in your Bootcamp Templates folder. So you click Save, and voila, you saved that template. Now we're going to install that MT4 template and set up your chart on your Who Goes Way broker's demo account. So you're going to go back on your taskbar, right? If you didn't save this on your taskbar, it may be on your desktop. So what I would do at this point, if it's not here on your taskbar, you may go to your desktop and find it and just right click on it and pin it to your taskbar. Okay, so now it's going to stay here on your taskbar. So now we're going to open it up, right? We're going to open it up, and I am going to have to here delete this. So give me one moment because it's already here, right? And so I'm going to have to delete it in order to show you how to put it in. Okay, so 1 second. I didn't know it was in here. As a matter of fact, I'm not even going to do that. Let me show you what's going to happen. Okay, so the first thing you're going to do is you're going to go back to the folder that you saved the template in. Okay, go to Documents, and then you're going to find the Bootcamp folder that says Bootcamp templates. You're going to open that folder. Now the basic student template is in there. You're going to click on it to highlight it. Then you're going to right click and then click copy. So now it's copied to your computer's clipboard. So now you can close this out. Head back over to your Who Goes Way MT4. And now once you're here, you're going to click on File. You're going to click on Open Data Folder. And a box is going to open up just like this. And now you're going to click on the Templates folder. Double click it. And anywhere in a white space, you're going to right click and then click Paste. Now because I already have it here and it's installed on my computer, it's going to ask me to replace the file. But when you do it, it's just going to simply save it in your MT4 in the templates folder, okay? And then you simply just close this by exiting out. And now the template is here in your MT4. So now what you have to do, okay, let me get rid of this. Let me just pretend that I don't have this, because you won't have anything here, okay? So now to add the chart to your MT4, you're going to click on File. Well, let me take a step back, because this is going to be a new account for you. So the first thing you're going to have to do after all that you just done, you're going to click on View. You're going to click on Symbols. And you're going to go to the FX major pairs, okay? You're going to click on that little plus sign. And now it's going to bring up all the Forex major pairs. You're going to locate GBP USD. That is the Great Britain pound against the US dollar. And you're going to click on it until it turns yellow, as these are already yellow. So when you see it, it's going to look like this. So you have to double click it and it's going to turn it yellow. And now it's going to allow you to load it to your window here. So click Close. Now you're going to go to File. You're going to click New Chart. And now you're going to go to FX Majors. And you're going to find GBP USD. And you're going to click it. Now it's going to bring up this folder. The only thing you have to do is click Maximize here. Okay. And it's going to make it big. All you do now is go to your templates folder right here on the MT4 station. Click on the drop down menu, and now you should see your template here, Basic Student Template. You click it and it's going to load, okay? And that is how you essentially install the MT4 Student Basic Template and set up your chart and the currency pair. All right, boot campers, this is the last section of this video training to complete your homework assignment and to be able to do all the things that is necessary for you to execute trades throughout the bootcamp training course. The first thing I want to do is go over with you the different times and sessions that may suit you as a trader based on your current lifestyle and what you have going on. Okay, some of you may have a full-time job or a part-time job, a business, whatever. So the market has a place for everyone, all right? You may be a person, you can only trade during the Asian market, as you can see here, which is between 7 p.m. until 9 p.m. That is the best time to trade during the Asian market. You want to trade within this window because this window is going to give you the most opportunity to execute a trade, okay? Or you may be a person, you're sleeping all day because you may be working in the evening and late midnight hours, or you just may be a person that, you're up during the late wee hours, okay? So the London session or the London market will best suit you. And that market's time frame is 2 a.m. in the morning until 5 a.m. is the best time to trade that market, okay? Now, all these markets are open longer hours, but these are the best windows of these markets to execute a trade. So if you are a New York person, meaning you are a person that, you have the time, and you may be a self-employed person, a stay-home mom, or, you just have that type of time, freedom on your hands, New York will be best for you, and those hours are 8 a.m. until 10 a.m., okay? You are required, trader, to make a minimum of 20 trades throughout your boot camp journey, all right? No excuses. You need to do 20 trades, and every day you must post your trade by end of day. If you do not, you forfeit your boot camp training, and you will not get your certificate. Neither will you be allowed to go to any advanced mentorship programs that I offer, because I'm only looking for students who are, one, coachable, who are humble, and who are willing to do the work. I will not hold your hand. I will not beg you to do this. If you don't do it, it just simply tells me this is not for you at this time. You're not serious enough to do the work and be committed to what is necessary to make you successful. I have the tools, I have the experience, I have the knowledge, but I cannot force it on you, okay? And so with that being said, I want you to choose a market that will best suit your time schedule right now. Okay, next, let's go to the charts. We're going to go to the charts. I'm going to get out of this. 1 second. Okay, and we're going to go back to the broker, all right? Now, I want to explain a couple of things to you regarding the platform here. Now, there are different time frames in the market, and each time frame obviously is going to tell you a story as to what is going on in the market. The time frames begin at the M1, okay? This is the minute time frame. M just stands for minutes, okay? The M1 is simply a time frame where every candlestick represents 1 minute in time. So every minute, a new candle is created in the market based on whatever pair you are looking at, okay? Also, it goes from the M1 to the M5. Same thing. It's just now every candle here is representing 5 minutes of time. 5 minutes of time, all right? The M15, same thing. 15 minutes. Every candle represents 15 minutes of time. This goes all the way up to the monthly, okay? I want you to take note of something, trader, okay? Every time frame that you go up, the higher the time frame, the less noise you're going to see, okay? The less noise you're going to see. Let's go back to the M1 time frame. You see on the M1 time frame, you have a lot more back and forth motion, okay? There's a lot of noise going on. But when you go to the M5, it starts to get a little smoother. You see, it starts to get a little smoother. Then the 15 minute, a lot more smoother. The M30, extremely lot more smoother, okay? H1, very smooth. H4, really smooth, okay? Less back and forth movement, less waves, because the market moves in what waves? See these wave patterns? Came down, up, down. It's like a motion. It's an ocean, okay? Up and down, up and down, up and down, up and down, okay? The daily. Look at this. Look how smooth this is. Less noise in the market. The higher you go up, the less the noise, okay? Now, as a trader, look at the weekly. Now, here's the monthly. As a trader, right, you have to decide how often are you going to be able to check your charts, okay? Now, remember, you have to put on, at minimum, 20 trades throughout this bootcamp training course, right? Now, I would say the three main time frames that will be usable for anyone would be the M15, okay? And this time frame here, what you're going to learn is that it's more conducive for people who are considered scalpers. You are in and out of the market. You're looking to get, 5 to 10 pips. You're just in and out of the market, okay? In and out of the market. The 1 hour is meant for intraday traders, okay? These are people, you have a little bit more time. Less time. You can't be on here, going in and out making trades, right? So you're looking to get in a trade and last for the day, the entire day, right? And so with that being said, you're looking to trade the 1 hour time frame, okay? So you can check it every 1 hour once you get in the trade, right? And then the 4 hour, okay? The 4 hour allows you to check on your trade every 4 hours. For right now, you're not going to utilize the daily, the weekly, or the monthly because you have a goal to meet throughout this bootcamp journey, all right? So now that you understand that there are different market sessions that you would have to choose, whether it's going to be the Asian market, the London market, or the New York market, all right? So we have an understanding there, right? You understand what's going on with the time frames and which one might be best suitable for you. Now, I'm going to go through each one of them again, but this time we're going to execute a trade based on what we see in the market on each time frame, all right? Now, also, before we even do that, here's what I want you to do. We're going to use something that's called period separators. Period separators. What it does is it separates the hours from the days and the weeks, okay? So what I want you to do on your screen, once you start, I want you to left click. I want you to go to properties, and I want you to go to the tab. There's two tabs here. One says colors, one says common. You're going to click on the common tab, all right? And over here on the right side, you're going to see little boxes that you can put a check mark. I want you to put a check mark in the box that says show period separators. So you're going to click that, show period separators. Voila, look what it's going to do. Now, from the hour on up to the monthly time frame, these period separators tell a story, okay, in time frames. So the 1 hour between each period separators is giving you the data for 1 day. For 1 day. This is a whole day. This is why I said, as a intraday trader, someone that has, a little less time than someone that can sit here and trade on the 15-minute, right? You want to trade based on the information for the day. Now, I should have said this. On the 15-minute, right, each period separator also represents a day. So between the 1 minute, and the 1 hour, the period separators are giving you the data for 1 day, 1 whole day. Again, from the 1 minute to the 1 hour between each vertical period separator is representing 1 day of data in the market. So now it's pretty much telling you, if you were going to use the 15-minute time frame to trade, right, and scalp, meaning you can do several trades a day if you wanted to, right? So let's say you were using the 15-minute time frame to trade, right? Whether it's the Asian market, the London market, or the New York market, it's all within this time frame, all within this window of time, okay? The New York, the London, and the Asian market is all within this window of time. This is actually real time today for the GBP USD on the 15-minute time frame. This is all 1 day's data, which is today. You see here on the bottom screen, it says April 14th at the time of this video. April 14th, it is 2023, right? So if you were here, right, depending on what time you was trading today, okay, whether the London or the New York or the Asian market, price would have either been above or below. So let's say, let me just find it for you, because this is also military time, okay? Military time with Georgian time, okay? So you see down here at the bottom, it gives you the day and it gives you the time. Also, this is not Eastern Standard Time. This is GMT time. So these brokers, remember, well, you don't remember because you don't know. Most brokers, especially this broker, they're not in the U.S. These are out-of-country brokers. These are offshore brokers, offshore bankers that are dedicated to foreign exchange trading, okay? Or for the U.S. clients. These are banks, but they're offshore banks that offer Forex, okay? And offer trading platforms. So, back to what I was talking about. So, 1600 hours, if you know military time, that is 9 a.m. U.S. Standard Time. So, let's find 1600 hours, okay? 1600 hours is right about here, right here. Okay, I'm going to put a little vertical line here. Okay, I'm going right over here to these tools, and I'm just hovering over it. You see it says draw vertical line. So I'm going to click it, and I'm just going to bring my mouse over here, and I believe it was this candle right here. Okay, I'm going to make it yellow so you can actually see the data on this vertical line. Okay, now you can see 1600 hours. Let's count. 1200 hours is the beginning of the day, right? So we're going to subtract 12 from here. All right, so 12, 13, 14, 15, 16, that's 4. So since it's GMT time, you got to add 6 to that. All right, so 1200 from 1600 gives you 4. Now if you add 6, it's going to give you the time that was Eastern Standard Time. So that's 4, and now you're going to add 6. 4, 5, 6, 7, 8, 9. That would have been 9 a.m. So at 1600 hours, that was 9 a.m. That is when the actual New York market opens, right? But remember, I told you that the New York session, the best time to trade is from 8 a.m. to 10 a.m., right? So you would want to be at your computer, okay, or looking at some device that you have this information downloaded on to actually begin trading the market, right? So if this was 9 a.m., this candle right here was, because these candles are every 15 minutes. So this candle right here would have been 8:45, right? So this one would be 8:30, right? 8:30, because this is every 15 minutes. So around 8:30 a.m., the market went into a predominantly bearish market. Before 8:15 or 8:30 a.m., it was above the yellow line, so you would have been looking for buys. But after or at 8:30, you would have started looking for sales because the market switched and it came down below the yellow moving average. So remember, above this moving average, you're looking for buys. Below, you're looking for sales. So if you were looking to trade during the New York market, you would have been looking for a sale. Before the New York market, on this day in this window of time, you would have only been looking for buys. You got it, trader? I hope you understand. So now, let's decide. If you were going to use the 15-minute and scalp, right? And you were trading in the Asian and London market, you would have been only looking for buys, right? So here it is. You came to your computer. Maybe this candle right here was red, right? You know, because it's above this yellow line, you're only looking to enter what? A buy. So you would have to essentially wait for the market to give you an opportunity to buy, looking for what we call a bullish candle. Okay, remember, blue candles right now, because these are the colors that I've chosen. They can be any colors that you want when you start trading on your own. But for now, we're trading bullish candles are going to be blue, okay? Bearish candles are for sellers. They're going to be red, all right? So right now, you're here. This is when you got to your computer station. You said, I'm going to go trade. It's during the Asian market. I want to trade here. So when you get a blue candle, what you're looking for is for that blue candle to get at least slightly above. You want to get above the previous bearish candle, all right? And right there, you're going to execute a buy. So how would you have done that? Let me show you. To execute a buy on your terminal, you're going to see a little rectangle, little dot here. You're going to click on it. This is the easiest way to execute a trade because it allows one-click trading. Now, when you first click it, if it's your first time using your terminal, it may ask you to agree to one-click trading. All you're going to do is click the button yes, and then at that point, it's going to allow you to do the one-click trading. And then now you get to execute your trade. So if you were here and you wanted to buy, okay, we're going to pretend that you have a $10,000 account, right? Remember, a $10,000 account at minimum will allow you to trade at least a standard in the market, all right? As a matter of fact, I don't even want you to trade a standard. Here's what I want you to trade. Yeah, I do want you to trade a standard. You're going to trade one standard lot size, okay? And so you're just going to click buy. To click buy, you click buy on this side. To sell, you click sell. So if you were in the market to buy, you will click buy. Right now, I can't click it. Why? Because the currency pairs are closed on Fridays at 4 to 5 p.m. depending on the broker. The only thing you can trade live on Fridays after 4 or 5 is cryptocurrency. But if this was at real time, all you would have to do is click buy or sell. So to give you this in real time, to show you how to do other things that I want you to do, for now, just for trading purposes, you're not going to be trading Bitcoin. I'm going to have to use a Bitcoin template. So I'm going to go here and open this up, and I'm going to create a new chart for Bitcoin. And I'm going to put my student template on here, all right? So we're going to go back to the 15-minute time frame. I'm going to put the period separators on by going to properties, the common tab, and I'm going to put a check mark and show period separators. All right, so this was today in Bitcoin. Okay, today in Bitcoin, the market was predominantly bullish. There were a lot of buyers in the market because the majority of the day, the price was above the yellow moving average, right? So if you were trading during the Asian, London, and then the beginning of New York, right? The beginning of New York, you would have been essentially looking for buys, right? You would have been essentially looking for buys. So let's say, okay, I'm going to click this little button again to allow me to buy and sell, right? So let's say you were going to trade Bitcoin, right? Right about here somewhere, right? Because you have to buy. Right here, you could not have bought. It was selling. So you had to wait for the market to pull back to the upside and wait for a bullish candle to take out what? This bearish candle. You want the candle to get at least a little bit above the previous sell candle because you're looking for buys. So all you would have done is done what? Right here, you would have clicked buy. Now see, this is what I was telling you. When you're first using your terminal, it's going to ask you to accept the disclaimer for one-click trading. So all you're going to do is click the box that you accept, click OK. Now you can go and initiate the trade. So you're just going to click buy. Boom. All right. You would be in the market in a buy. Notice down here, this is your order entry information. It's going to tell you your order number, the time stamp that you entered the trade, the type of trade you entered, which was a buy, the size, which is $1, and the symbol BTC USD, the actual price that you entered the market, right? Now, right here, this is where you would essentially put a stop loss. And I know I got to go through this information fast with you because it is required that you put a stop loss. So what is a stop loss? A stop loss is essentially a place mark where you're telling your broker that if this trade goes against me, I only want to lose this amount of money. So when you're buying, your stop loss would do what? It will go below your entry. So since we entered a buy, your stop loss would have to go below the previous sell candle, right? So what you would do is hover your mouse over the order, right? Until you see it says drag to modify. So all you would do is just rotate your mouse over the buy order, right? And you want your mouse to hover over until you can see it says drag to modify. Once it says drag to modify, it's going to allow you to drag a line from your order to place your protective stop loss. So now that it says drag to modify, I'm going to left click, hold it down, and drag the line under the previous sell candle. And I'm going to release my hand from the mouse, and it's going to set it right there. Okay. Now, what you've told the market is you want to buy, you want to go up, but if the market comes down against you, you want to get out at a loss of $1,241. Why? Because you entered a standard lot size. Now, you just saw that buy was taken out because real time right now, the market is moving, okay? And so I didn't set the stop loss low enough because I'm really showing you this from up here where you would have gotten into the market, right? Now, let's say also, I'm going to put a fake line right here. Now that you know how to execute a trade and place your protective stop loss for a sale, let's say right here, this is where you would have entered that in real time, right? The line would have been green. So I'm going to make it green to make it realistic. Okay. Under here is where you would have put your stop loss. That would have been in real time a red dotted looking line. So now this is where you entered the market for your buy, which was this candle here was slightly above this candle here. So you would have simply just entered the trade in your buy and then hovered your mouse over here until it says drag to modify and drag the line. It will have turned red and dropped it right here. Now, you would have stayed in this trade, right? Because you're trading the 15-minute. You would have stayed in this trade till you got a closed sell candle, right? Because you're scalping. Scalpers only look for 5 to 10 pips at a time, right? So since you were scalping, you would have essentially closed right here. How many pips will you have made? Not that many right now, right? That wasn't that many. Probably 22 pips. So once this candle closed, all you would have had to do, because the order was down here, right? I'm going to do it again just to show you if you were in a buy. If you were going to close it, right, you would just click this little button right here down on the right bottom corner of your chart. You see this button? If you click it, it closes the trade for you. And that's all you would do. This is what you're going to do. It's called the color game. This is the most simplistic strategy in the market. All right. No matter what time frame you're going to trade from, at this moment, we're looking at the 15-minute time frame, right? We're trading in the Asian or the London market. That's right around here somewhere. And we are above the yellow line, so we're looking for buys. So you would have entered that trade as soon as you see a closed candle in the opposite direction. You don't want the candle to be working. You want it to be closed. Well, how do you know it's closed? Because when it closes, another candle comes up, right? So this candle closes, you close the trade. Now you look for another opportunity. You would have had another opportunity where? Right here. When this candle got above here, you would have simply pressed the button again, right? Real time, you would have been right here. Your order would have been right here, right? And your stop loss would have been right here. You would have told the market, all I want to lose is this amount of money if the market comes back. So now you enter the trade again. Now you got another closed candle. This time you made 39 pips. So that would have been $390 for you, okay? Now, if you were trading this particular pair, and you would just keep doing that same method as long as price is above this yellow line. The minute price gets below, you're no longer looking for buys, you're looking for sales, okay? So once it closes below here, on the next candle, you could have sold if you were trading the New York market. All right, so much for that. Let's move along. This same strategy applies whether you're trading the 30-minute, okay? This is the data for the 30-minute time frame. Notice how this looks different from the 15-minute, okay, for today. Okay, if you were trading during this day right here, the market was up and then it came below. On the 30-minute time frame, it stayed above. So if you were trading the 30-minute, now there's a different story. You would have only been able to look for buys. You see the difference here? Let's look at the hour. What was happening on the hour with this pair? Okay, on the hour time frame, you would have only been looking for buys as well. All right. Hopefully you got the picture now. You understand how to set your stop loss and you know when to get out of the market. When you're in a buy, you're looking to stay in that buy until you get a closed candle going in the opposite direction. When you're in a buy, when you execute your buy, you're going to hover your mouse over that buy order and you're going to wait for it to say drag to modify, and you're going to drag that mouse, drag that line under the last bearish candle. Okay, now let's look for buys. I'm going to go back to the pair you're going to be trading. So if we were looking for sales, let's look for sales. So let's say you were trading in this day during the New York session. You see, during the New York session on this pair, on the 15-minute, you would have only been looking for sales. So guess what? If you were trading this pair today, you would have entered this trade right here when this candle closed. There would have been your order line right here. It would have been green, right? And you would have took and hovered your mouse over here until it says drag to modify, and you would have done what? You would have dragged your stop loss above the previous buy candle, okay? The previous buy candle was right here, right? So you would have dragged your mouse and you would have set your stop loss above, because when you're selling, your protective stop loss goes above the previous buy candle, which would have been right there. And so now this, in real time, it would have been a red dotted line, And this is what it would have essentially looked like. So let's count how many pips you would have stayed in the market. Because remember, whenever you're getting in, this strategy is called the color game, okay? You find your entry based on price being above or below this moving average. Once you're in, you stay in until the market closes in the opposite direction. So you would have stayed in until this candle right here closed, right? You would have picked up 77 pips. With one standard lot, you would have earned $770. Well, how do you know it's 777 pips? The information below here, the first set of numbers tells you how many candles. Then there's a forward slash, these white numbers that you see here. Then there's a forward slash, and then it says 770. Well, the first two numbers tells you how many pips. That would have been 77 pips. The last set of numbers tells you the price that you would have gotten out of the market. All right, you have the information now. Hopefully now you understand how to enter a trade, how to exit a trade, how to set your protective stop loss, how to know when you're buying or selling, what time of day you're going to be trading, and what time frame you're going to be trading based on your time schedule. I suggest you watch this video multiple times until you understand it and you start executing it. It's okay if you don't get it right the first time. This is why you have this video to watch over and over and over, because by the time boot camp is out, you want to be able to execute, okay, seamlessly, so you can start making money in the market with me in our VIP live trade sessions, okay? Remember, in order to get an invite into the VIP, you have to complete your boot camp. You have to complete a minimum of 20 trades, and every day you must take a picture of your trades and put them inside of the boot camp's Telegram chat group. All right, and then complete all of your exams, show up to class every day, and I look forward to seeing you all on the other side of financial freedom. All right, happy trading.